Welcome back to. Oh, let's see. We got my microphone back there. Okay, so we had Black Friday and we had Cyber Monday. Actually, was yesterday. I tried to look for some numbers on that this morning. I really couldn't find numbers on Cyber Monday. I do know there's some numbers about what happened on Black Friday. Here to talk more about the economic implications, we have a professor of finance from Stockton University in New Jersey. Dr. Michael Busler's back with us. Michael, how are you, sir?
Good morning, Paul. How are you? Thanks for having me. It's always my pleasure to be here.
Yes, sir. I'm doing fantastic. What was your reaction? What are the headlines saying about the consumer activity surrounding, everybody trying to get their Christmas presents and stuff?
Yeah, so based on what happened Friday, where we do have some numbers, and what happened yesterday, where, as you pointed out, we don't have numbers yet, we should have them shortly. This looks like it's going to be a bang-up Christmas season for retailers. So the record for the most sales in one day was last year. Cyber Monday was $7.8 billion. On Friday, Black Friday, the number came in at $7.4 billion. That's a record for a Black Friday, a little short of the record for a one-day sales. Yesterday, some of the early numbers I saw indicate that the sales will be over $9 billion. And I had one associate of mine saying it could approach $10 billion.
Wow.
So what that shows is the consumer is very confident. Consumer confidence is near a record high. It has slipped a little bit in the last couple months, but it's still near a record high. So with that kind of confidence and with the fact that wages are growing at the fastest rate in more than 20 years, and inflation remains relatively low. So when you get an increase in wages, it does increase your purchasing power because prices haven't gone up very much. So consumers are very confident. I think this Christmas selling season will be exceptionally strong, probably 4 to 5% higher than we did last year. And I think that momentum will carry forward into next year, and I'm looking for a better 2020 than we had in 2019.
Wow. That's really, really positive news. I think that, I have seen some indications, Michael, or some of those reports talking about, people still have not paid off some of the debt they incurred last year during the shopping. But, to your point, consumer confidence, it seems like people are, really happy with where things are. I know the stock market took a little hit yesterday with some of that reporting, but all in all, what would you call this? What is this, MAGANOMICS?
Well, actually, what President Trump did was really go back to what truly made America great. So the prior administration didn't concentrate on economic growth. As a result, from 2006 to 2016, economic growth only averaged about 2%, and that created all kinds of problems. So President Trump said, look, we have to get economic growth up. If you really want to help people in lower income, don't just give them things, which is the Democrats' view. Let's just give them free health care. We'll give them free college. We'll give them free even guaranteed income. Instead of just giving things, President Trump said, all I'm going to give everybody is opportunity. So I'm going to get the economy to grow, and he did that by reducing burdensome regulations, which he could do through executive order quickly. Then he got Congress to reduce taxes, passed in 2017. That gave more spendable income to the middle class. He also cut taxes for the upper classes, which created capital, which enabled expansion. So he just pretty much went back to what Ronald Reagan did in the 80s and even what Kennedy Johnson did in the early 60s, both of which accelerated economic growth. So he minimized regulations, eliminated the bad ones, cut taxes for people, and that created more spending. The economy grew, and now he's really helping the lower income people. If you look at some of the minority unemployment numbers for African Americans and Hispanics, they're at record lows. So he's really provided opportunity for growth, just doing what Kennedy Johnson did and what Reagan did back in the 80s, just cut taxes, reduce regulations, and set up an environment where people were able to succeed, and the economy is now growing, and things are a lot better.
To your point, Dr. Busler, with minorities, we have some polling on President Trump's approval rating. So we had one a couple weeks ago, Rasmussen, showing that 34% among black voters, 34% favorable rating. Emerson University, 34.5% support from black voters. But recently, over November, it was taken November 11th to the 15th, the NPR, PBS, and Marist poll found that Trump has a 33% approval rating of non-white voters, just anybody who is, not Caucasian. So, to your point, I think they probably approve because their economic circumstances have improved.
Yeah, Paul, that number is very significant. When President Trump was elected in 2016, he only got 8% of the African-American vote. So if you're going from an 8% approval up to nearly 35%, that's very significant. And he's done it not by guaranteeing to give free stuff to everybody, only saying what I'm going to give to everybody is opportunity. And I'm going to allow people to create an environment that allows people to take advantage of that opportunity. And by lowering your taxes, your tax rates, that allows you to keep more of what you earn. Another great incentive. So not only are the lower income earners doing better, but we have some people who had dropped out of the labor force over the years because there wasn't jobs for them. These people are being drawn back into the market. And one last point, a lot of my students who've been graduating for the last decade, because of the poor economy, were very lucky to get one good job offer. Many of them had to settle for a job that really didn't require a college degree. So you had that underemployment situation, making it worse. A lot of these students had debt to carry, so it became very difficult for them. Well, now that the economy is growing, these underemployed college graduates are finding opportunities more suited to their educational background that increases their income. So this college debt, which everybody says is a huge thing, we got to get rid of it. It's $1.5 trillion. All that is true. But when you break it down, the average student with debt has about $30,000 worth of debt. Now, that's a substantial number, but the government gives you 10 years to pay it off, so the monthly payment is like a car payment. So with better opportunities and higher incomes, everybody's doing much better.
So you're saying that your students, that they used to only have, they were lucky if they got one good job offer. You're saying they now have some options. They're getting more than one? Yes.
The students this year that are graduating, you start your job search really about this time of year. Most of them are telling me that they're getting very positive responses. Good. When I talk to our career center, they tell me there's more companies coming on campus for these career days, and we're back to the way it should be, where college graduates should have one or two good offers and to choose between them. So the college students now, I think, are going to be much, much happier. That may take their view away from socialism being such a good thing and more towards the market economy.
Let's hope. Hey, I've got one last question for you. So, a lot of this economic growth has come from these tax cuts. So, probably not next year, but if Trump wins re-election, do you look for even more tax reform in the future?
I do. I think there's some room to grow the economy further using tax cuts. What I would do next is I would reduce the capital gains tax rate down to 15%. It's a sliding scale between 15 and 24%, 23.8% now. But I would drop the capital gains rate to 15%. Now, as an example of what that'll do, in 1996, President Clinton convinced Congress to reduce capital gains from 28% down to 20%. For the next 4 years, economic growth averaged 4.5%. So the economy really grew, and because of that increased activity, even though they dropped the tax rate, the amount of revenue they collected actually went up. The rate went down, but there was so much more economic activity. You're taking a lower rate times a much larger number, and as a result, revenue went up. So if you use that as an example, cutting the capital gains tax rate will again increase economic growth, and given that decade of stagnation, that's really what we need today.
Dr. Michael Busler, sir, it's always great to have you on. Appreciate your analysis.
Thank you, Paul. Look forward to doing it again.
Yes, sir, absolutely.